Guys? It is Dylan here. Today we'll be going over a ticker symbol analysis on the ticker symbol MVIS microvision. Before we get to the technical analysis, patterns, price action, trends, and more, I just want to let you know that I am bullish on the company. So with that being to the side, let's just get right into the chart. Okay, so you do see that. I'm just adjusting my volume and my indicators just so you can see the chart better. We did get a very bullish day the prior day, as we did come and open at that $14.16 level, where we did close at that $15.60. Very, very nice day, if I do say so myself. On the daily, you do see that right now concurrently we are trying to hold that 50, that 5, and that 9-day moving average on the daily. Definitely keep an eye on these moving averages, as generally you do see those act as nice support that the chart does like to ride up on and bounce off. But if we can't do that on the daily, and it does look like it's given it's a good run for its money, it's currently at that support line at that 14.55. But besides the matter, definitely keep an eye on that in the daily. On the 1 hourly, you do see that we did breach that 50-day moving average, and it does look like we will come down and test that 5. If I go to the 4 hour, you see that we did get a very, very big a very big sell bar according to all the prior candles. Okay, so this definitely isn't a bullish sign, as it's just a lot bigger than the according, followed by a very big red bar of volume. Okay, so the best case scenario for the bulls, we do enter tomorrow and we close today above at least some of these moving averages on the daily, which it is trying to. So that would be the best case scenario. And a big sign of resistance is anywhere around that $16 range, as we did close above that $16 range, but we couldn't get a candle to really make its mind and get a bullish candle to fully confirm that breakout of that resistance. Okay, as we did get a big wide bar, followed by just a pretty strange candle that's definitely not bearish, followed by a very big doji, which we did collapse, as dojis do form indecision in the market, right? As you do have even price rejection to the top and the down. Alright, so with that being out of the way, we're going to zoom out on the hourly just so I can emphasize a point. Whenever we get above that $16 level, we simply have wicks, right? We have one wick right there, a little bit of a body there. We couldn't close above it. And we have 1, 2, and 3 wicks above that $16 level. And once again, we did the trend. We came right back up. And this time they weren't all wicks, but we couldn't get the nice break we wanted. We should have false breakdown on that resistance, and definitely a lot of bulls got trapped. And a big contributor to the fact that we did squeeze out this nicely is that we did have this head and shoulders. You see the shoulder, the head, and the other shoulder. And I'm sure a lot of short sellers, bears, hopped in on the break of this neckline around that 13.74 range, where quickly we found support, and they did get squeezed out with a bullish flag. So as of right now, the bulls definitely wouldn't mind seeing some consolidation, as we're taking a very dramatic turn for the worst. Okay, so we are at that 14.55 level. We definitely do want that to hold, or at least I should say if you're a bull. And then the next level you're going to be watching is that 14.13. And then you'd be likely watching that 1373. The 1373 is a very big part in the chart that I did mark up in my prior video. I actually did mark that up, and we did get a nice breakout from that, bounce off this support, and that also did help to the breakout to that bull flag. So anyways, you're going to be keeping an eye on that 1373 and that 1415. Well, at least that's what I'm watching. But with that being to the side, we're going to go over the 4 hour just to look at the psychology. Right, so obviously we might see a shift in selling, as obviously we have this big red candle that is way bigger than the according candles. So right now, a short seller's worst nightmare is consolidation, right? Some consolidation with an eventual rip is exactly what the bulls want to see. Right, if we continue to see this trend on the lower time frame of lower lows, lower lows, lower lows, if we continue this on the lower time frame, then it actually will come over and convert to the 1 hour, to the big time frame, as we did come up and set a low right there, right, and we set a low right there, which was higher than the previous. Okay, and we actually set a higher high and another higher high. So as of right now, I'd really like to see us get above that 1534. That 1534, since that's a very important part on the chart. If I go to the 1 hour, you do see that over here. 1534 was a support for this little consolidation phase, and actually we did come up and test it once and twice. You could say that 1531, anywhere from that 1535 to that 1528, same difference, right? Resistances and supports are more ranging than anything. It's not to a T. You can't take a line resistance to a T. As we did see, we broke above the resistance, but we got a false breakdown. Okay, so definitely keep an eye on that, and we actually do have prior evidence of that 1534 being a very important part of the chart, as it was major resistance over here. Okay, so with that being to the side, all right, the daily on the MACD, we're starting to get that golden cross. We're starting to see those green candles on the histogram after being in a death cross for 15 days. That is very nice. If we can close the day not too bloody, then we should continue to get that candle close on the MACD, which is very nice, as a lot of buyers don't even step into a stock unless there's a golden cross. Okay, so we do want to see the buying pressure increase on the MACD. If you're a short seller, you would love to see it do an action like this where, you know, it fakes out a golden cross and then traps some of the bulls, and the short sellers take advantage. But with that being to the side, we're going to go over the 15 minutes just to look at the psychology. Right, so this definitely is one of the one-sided charts, or I like to call it. It does seem that we're always going down or we're going up. We never really get a consolidation-like manner, maybe very minutely in little areas, but as of right now, it does seem like we want to go up and down, up and down. So potentially we could come down and continue to bleed off, but if you look in the past, we do have a tendency to fall down around that 16% range from highs. If I keep pulling up the Fibonacci retracement and I pull it up every time that we have a very nice run to test that resistance, it does seem that we do come down and come down around 16 to 20%. If I do take the Fibonacci retracement, we have fallen exactly 15% or so, 14.16 to be exact. So if past trends do play out, then we would come down to that $14 level, potentially even the bottom of that range on the 1334 until we want to make a move. Obviously, it doesn't take an expert to tell you that this technical analysis isn't set up too nicely for the longs, where we do have a nice hammer candle on the 15-minute, but I'm not here to talk about very minute moves, but as of right now, we just want to see a trend reversal as the bears have full advantage of the chart, higher highs, higher lows. Keep an eye on the MACD and the RSIs. Those are very important. With that being said, have a good day. I do mean that genuinely. Take it easy, guys. Peace.